Hello again, traders. Doing trouble there from Drfx, swing trading mentoring. Going to be taking a look as usual at the currency pairs that I think could provide us with trading opportunities within the next 12 to 24 hours by basically taking a look at the main technical factors that are now controlling these currency pairs. First up is the New Zealand US dollar, which as you can see looks as if it's forming a consolidation setup on its daily chart. So far, we've had the support boundary already formed and one resistance point rather, at this area here. So the market would need to provide us with a second resistance point to complete the formation of the resistance boundary and complete the formation of the overall consolidation setup. So what could happen is that the market could either rally one more time and then U-turn to provide us with this resistance point and start the downtrend that takes us back down to the support boundary, or we could also have the bearish signal given right now within the next couple of days without rallying and take us down towards the support boundary. So these are the two ways in which the market could confirm this as being the second resistance point and start the movement that takes us back down to the support boundary. Taking a look at the 4-hour chart of this same currency pair, you can see that the market has come down to just above the uptrend line that has been formed. And so the break of this area here, the break of this trend line, would confirm the start of the movement down towards this area here, continuing the bearish move that has already started, and continued movement all the way down to the support boundary. Now, given the size of this consolidation, what we would prefer, or what would be required according to our rules, is for the daily chart to provide us with the green light in terms of the signal. So even though we might see the 4-hour chart break this uptrend line, that has to be confirmed with a strong bearish signal on the daily chart here. Otherwise, trading this just because it breaks the uptrend line is going to be risky because of the possibility of a reversal that rallies one more time to create this option in terms of how the market could provide us with the second resistance point. So the market could break below the trend line here, but then it could be temporary as it U-turns and rallies one more time to then provide us with the real resistance point, and where the market could actually provide us with the bearish signal here. So since the daily chart is controlling the movement and the signal, and it could either be provided here or higher, the best thing is to wait until the market provides us with that daily candlestick signal and then go down to the 4-hour chart to look for a trading opportunity and an entry setup. Euro US dollar daily chart. This one also looks as if it's forming a smaller consolidation compared to the one on the New Zealand US dollar. Bearish and bullish wave formed here, and a sideways movement taking place over the last couple of days. So this could lead to the formation of a bearish signal that takes us down towards this area here, where it would then form a second support point to complement the one already formed here, and start a rally one more time to take us back to the resistance boundary, which would have been formed by this bearish signal here, and in so doing complete the formation of this consolidation setup. So given the size of this consolidation and given the hesitation that has taken place for the last several days, the better thing to do is to wait until the daily chart provides us with the signal here, and then trade the signal itself with a stop loss placed at a strong area on the 4-hour chart. Similar setup on the Australian Swiss franc, this time on the 4-hour chart. Here we can see that the market definitely giving signs of the formation of a consolidation setup. Right now we're just at the uptrend line, and you can see by these tweezer tops that there's been an increased level of selling pressure, similar to the one that started this bearish movement here. So this could be the start of the downtrend that breaks the uptrend line here and then takes us down towards this area here. So we're going to be looking out for the appropriate type of signal that is strong enough and clear enough that will provide confirmation of the start of this movement bearish. Canadian Japanese yen daily chart. This looks as if it could be forming two types of consolidation. One is a smaller one that has already been formed in the form of this range setup here, and the second one could be formed a little larger with a larger setup here, with this being the possible resistance boundary and this being the support boundary. Now, as you can see, the support boundary has already been formed with these two support points, but only one resistance point. So any U-turn that takes place here would be not only creating a false breakout reversal that takes us back inside of this smaller consolidation, but it would be creating the second resistance point to complement this one, and in so doing complete the formation of the resistance boundary. Taking a closer look, you can see that what is expected and what is possible is for the market to provide a strong bearish signal, indicating the reversal, start of a reversal and a bearish trend that would, as I said before, create this second resistance point, and in so doing would also create a false breakout reversal that takes us back inside of this range setup. So we're going to be looking out for the daily chart to provide us with the signal, strong bearish signal that closes comfortably within the consolidation below the resistance boundary, and once it's strong enough and appropriate enough, once it is strong enough and in sync with this size of consolidation, then we can look to take advantage of it and look for a trading opportunity on the 4-hour chart. Canadian Swiss franc is in a consolidation setup, a fairly normal size consolidation setup on the daily chart. So we're going to be looking out for a trading opportunity on the 4-hour chart within the next 12 hours, assuming that it's going to be rallying at the support boundary here and taking us back up to the resistance boundary. So those are the setups that I think have the greatest chance of providing us with a trading opportunity within the next, I would say 12 hours to 24 hours. And what I'm going to be also doing is sending you a graph of the Euro Canadian dollar, which I think would provide us with a trading opportunity as well. If we see the 4-hour chart pull back a little bit to provide us with a better opportunity. Depending on your risk-reward ratio, you could actually decide to enter the market now at where that price is for the Euro Canadian dollar. But my preference would be to actually wait until it pulls back to provide me with a better entry, a better risk-reward ratio, and a better rate of return for this trade on my live account. So I'm going to be sending you that along with this video. And of course, if you have any questions, you can let me know by hitting that reply button and sending me an email. Of course, you can contact me via Worldwide 876 and Drfx Trading via Facebook. So in a little bit, I'll give you this information.